All right, ladies and gents, welcome back to another YouTube video. So today's topic of chatter is going to be on why I believe most people are stuck in the losing phase of trading, and why they keep losing and why they can't seem to break through to any level of consistency. I believe that the majority of people are trading early on in their beginner stages from a discretionary approach. They're trying to read the market, they're trying to decipher context, and for the vast majority of beginners, this is simply not a sustainable way of approaching the market in the beginning. Sure, later down the line, I think discretion is important, but when you're first starting, discretion is the last thing that you want to be delving into. Now, my experience, so I'm coming up to almost a decade in the market now. So I have experienced a lot of cycles and I've seen a lot of mistakes from people, and I myself have experienced a lot of mistakes. So when I first started trading, I was probably given the best foundation you could get. Looking back, I did not realize this at the time, and so I didn't take that opportunity well, and I thought I knew better. I thought I knew better than my mentor, thought I knew better than the market, and we were given a rule-based system to start trading. Now, I didn't listen to this, and I thought, I don't need a rule-based, like, give me the complicated stuff, like, give me, the high-level shit, right? Give me that stuff, because that's what makes money, right? And so I was naive in the fact that I thought as a beginner, I was better than the market and I was better than a simple rule-based strategy. Now, this simply doubled, tripled, even quadrupled my learning curve because I had not laid the correct foundations, both technically and psychologically, and thus I kept going in circles. You keep going round and round, not making any clear progress. And there's a number of reasons for this. Now, first one is you're missing that feedback loop, right? With a discretionary approach, you don't have the correct processes, and every time your trading is going to be different. So you have no way of journaling, of keeping track of everything. And so you're not able to learn from your mistakes because every time it's different. And so you keep going round in this circle of thinking that it's going to change, but it never does. And why does it never change? Because you're trading discretionary. You don't have a rule-based system, and you're not able to build the correct foundations and build up from that. There's this almost lure of an artistic approach when it comes to discretionary trading. So beginners, I myself included, we are drawn into this false sense that it's a very abstract approach and we should have this very artistic approach and we should be able to draw all of these fancy patterns and lines and boxes on a chart, when the reality is that this doesn't get you anywhere, not as a beginner, and it's never gonna change your results if this is the approach that you keep going down. So something has to fundamentally change. So this brings me on to my next point, which is discretionary trading gives you far too much information overload and decision fatigue. Now, as a beginner, the last thing you want to be doing is having a whole bunch of information thrown at you. The last thing you want is all of these different technical indicators, all of these technical patterns, all of these lines and boxes on your chart, because that's going to simply cause analysis paralysis, decision fatigue, impulsive decisions, because you're not able to decipher between a good trade and a bad trade. You're not able to filter out all of this noise because everything is thrown at you at once. And so that's when you start taking poor trades. That's when you start exiting early. That's why you start taking profits early. That's why your trading is not consistent. That's why your approach is not consistent, and everything keeps changing. And thirdly, this brings me on to my next point, is you have a limited pattern recognition and market context. So successful traders, there is a level of pattern recognition in everything they do, of course, and market context. Beginner traders don't yet have the mental database, the correct mental database to decipher between the correct setup and noise. They struggle to filter this out because of the limited screen time, the limited pattern recognition, and the limited experience in identifying market contexts and market cycles. And without having the correct pattern recognition, discretionary trades often just look like guesses, and beginners try to justify why they took that trade by throwing in more technical lines, more boxes to say, oh, I took this because of XYZ. Next up, we have emotional biases and psychological pressure. Now, again, this is just basic stuff, right? Beginners have not yet built any level of emotional intelligence when it comes to trading. They have not built a probabilistic mindset. They do not understand losing. They are not good at losing. And so whenever they are trading from a level of a heightened emotional reactive state, and they're more likely to react off emotions rather than logical technical positions. And without a strict system, a strict criteria set of rules, you leave the door open for emotional biases to become involved in your trading. That's when you start cutting your losses late. That's when you start cutting your winners early. And that's when you start chasing the market, chasing trades, trying to profit. Professional traders feel emotions as well. Don't get me wrong. It's a very emotional endeavor. But the difference is that professionals are able to manage those emotions. They're able to feel those emotions. They're aware of them, and they are able to move forward without letting those emotions dictate their decisions in the market. But moving forward, then, we have weak risk management framework. And again, if you are not taught in the very beginning of a journey the correct frameworks in terms of risk, the correct processes to take, then you're likely going to risk too much on a position. You're going to skip stop loss orders. You're going to take partials when you really shouldn't be taking partials. You're going to be revenge trading, doubling down on positions in the hopes of making your money back because you don't understand the correct risk parameters in place. You don't understand the correct rules when it comes to risk of ruin, position sizing, and all of this stuff. So beginners often lack that safeguard that professionals don't. So what do you do instead? How do you approach the market if you're a beginner? Now, the number one tip that I'd recommend to everyone is start with a rule-based system. Have clear, defined setups, mechanical entries and exits, and stick to a consistent risk approach. And once you have built this experience over time, then you can start applying some of that market experience, that market discretion, that gut feeling that you have built over many, many years of applying those rules. So you should always keep a journal every single trade that you take, have that correct positive feedback loop, learn from your mistakes, and actually get better with your trading, get a better, more consistent approach. Then you're going to start seeing more consistent, better results. So I guess my final thoughts here is kind of beginners often underestimate the complexity and they overestimate their ability to perform in that complex market, and they overestimate how to manage their emotions and their risk. So by starting with structure and rules, you build discipline, you're able to protect your capital, you're not going to be blowing up easily, and you slowly develop over time that intuition that makes profitable and consistent traders so good at what they do. Discretionary trading is a skill that takes years to master. You must not underestimate how much work it takes to be a really, really good, consistent trader. Don't be afraid of trading a simple strategy. Most people think that they're too clever to trade a simplistic pattern recognition strategy, when the fact of the matter is that ego will simply kill your results, and it will kill your learning curve as well, and will almost double, triple, quadruple the time it takes you to actually start seeing some results. So I hope you enjoyed this video. I hope you took some value from it. I think this is a topic that not many people speak about, And I think it's very, very important for new traders to truly understand. Now, if you did enjoy this video, make sure to give it a like, comment down below, and subscribe for more. Thanks for watching, and I'll see you in the next video.